Well, welcome everybody. Steven Sitkowski here. This is my Building Wealth podcast. This is podcast number 25. It's remarkable. If I hadn't looked, I would think, I don't know, maybe I've done seven or eight, but the people that are watching, that continues to grow, which is very humbling and very satisfying. So, I put a fair amount into the prep that goes into these. Um, Delivering the message, that's kind of the easy part. I've done that for a long time. So I hope that you're enjoying it. You must be, or you wouldn't be here. So I think we should probably get to it. What do you think? Hope you had a great weekend. I certainly did. Hung out with some grandbabies. That's so much fun. Just these little creatures. We had two of them Saturday and Sunday, 3 and 4-year-old little girls, as cute as could be. Then we had a 9-year-old, and just sitting on the sofa, just everybody's snuggled up, watching a really cute animated movie. It was called Swapped. If you have kids or grandkids and you want to entertain them, that was very, very good. But it is August the 10th. Markets so far today are fairly flat, but that's subject to change throughout the day and subject to change between now and whenever you watch this particular broadcast. So, a little bit about me. I've been working with people and their money now for some 45 years. I'd like to think I've picked up a thing or two during that period of time. And I simply try to share what I've learned with people that would like to understand a little better how the markets work, how the economy works, and so forth. As a quick reminder, everything that we do here is for educational purposes only. It is not intended as investment advice. So even though, from time to time, I'll speak about a particular stock or make reference to something that I think is a good value, I'm not suggesting that you run out and buy it, right? I don't know anything about your circumstances. So just kind of take it all for what it's worth. And by the way, I always put out an email so that people have topics or questions they'd like to ask. And so one of the things I had several requests for was me explaining what a spread trade is. So I won't go into a lot of depth on that, but toward the end of this session, yeah, I'll be happy to share with you how those work. It is one of the staples for my trading partner and I. So, what is moving the markets? Well, Iran hardens its stance over Hormuz. Do you realize that deal's been going on now for almost 6 months? And I think a lot of people believed that it would kind of be an in and out operation. But people are kind of funny. When you go and you attack them on their soil, they don't just throw up a white flag, they fight. And I think that Iran believes that they have some leverage. They know that higher oil prices create a problem for the US, and they do, along with the vast majority of the world. And I think they feel like with midterms coming up, that they're in a position to negotiate. The strange part to me is that we will hear an announcement out of the White House that says the war is going in this direction. And then we hear something from Iran that is completely different. And the only thing I know for sure, the war's still going on. So, hopeful of some resolution. And because we haven't been able to come to terms. Oil prices are going up again, which is going to be a problem for inflation, which potentially is going to be a problem for interest rates. We're going to cover all that. Three major indices coming off the best week since April. So there's some happy news in spite of battling a war and high oil prices and high interest rates. And that is due, as I'm about to show you, to just a fantastic earnings season. It's been absolutely incredible. Companies are just making money by and large, hand over fist. A lot of that is because there's a ton of spending going on um, in the AI world, and that trickles down into other industries. SpaceX is back to its IPO price. So I'd feel a little bit better about buying it at these prices now that they've had an earnings announcement. So if you're a long-term believer in SpaceX and you said, okay, I'm going to wade into the water here, I would get it. For people who jumped in prior to an earnings announcement, unless you were getting a pre-IPO price, I just thought that was kind of foolhardy. 10-year Treasury is now up to 4.692. Of course, as oil prices go up, interest rates will follow. So we need to get that 10-year Treasury under 4.5, right? Stock market likes lower interest rates. So in spite of this, the market's been moving higher. And just when we thought we had oil under control, right, for a brief time there, it had a six handle. It was at $68 and change per barrel. And then last week, we were in the 75-ish. Now we're back up to 81.25. So this being oil prices, moves up and down as a reflection of the news that's coming out of the Middle East, right? And coming out, obviously, of Washington, D.C. Last week's market breadth, fantastic. So we are looking at the New York Stock Exchange on the left-hand side, the NASDAQ, which will be tech heavy, on the right-hand side. So between the two, there's about 9,000 stocks trading hands. So the first thing we like to look at, advancers versus decliners. So we've got 1,772 stocks that were higher on the NYSE, 1,072 that were lower. It's awesome. And then new highs versus new lows. These are 52-week highs and lows. 312 new highs, 160 new lows, almost 2 to 1 in favor of the highs. How about on the NASDAQ? Well, even more impressive on the number of stocks moving up versus down. 3,712 stocks moved higher for the week. 1,442 moved lower. 669 new highs, 411 new lows. So clearly for last week, the bulls were running the show. And what was driving that? The best possible thing that could have been driving it, earnings. There's an old saying, earnings are the mother's milk of the stock market. That is for sure. Last week's heat map looks great. About the only area where we see widespread losses, energy. What was that due to? Oil prices were coming down. Well, let's see what this looks like next week. But the big winner over here on the tech side, um, big tech did great. Microsoft up 7.5% on the week. NVIDIA 11.5%. Broadcom almost 10. Micron over 6. Intel over 12%. So all in all, a really solid week. Percentage of stocks trading above their 200-day moving average, that is now up at 61%. Anything over 50% is considered really good. 61%. That means 61% of the stocks on the S&P 500, which is an index consisting of 500 large cap stocks, are in a long-term bullish trend. That's probably the simplest way for you to decipher that. Great earnings season so far. So, 86% of all the companies reporting, which is most of them are in now, um, beat their earnings estimate. So 343 beats, 41 misses. That's fantastic. Revenue beats, 289. Beat revenue estimates, 96 misses. That's a 75% hit rate. You want to know why the market's going up in spite of? There it is. Now, this is kind of sad. It makes me feel bad for a big percentage of people. So, there was a survey done recently, and the first question, all in all, are people satisfied with the way things are going in this country? 29% are satisfied. This was done in January. I'm guessing less are satisfied now. 69% dissatisfied. And then the other survey question, thinking about the future of the US, do they think the country's best years are ahead of us? 40%. Behind us? 59%. Americans are typically an optimistic breed. We typically are full of ourselves when it comes to pride in our country, almost to the point where some might consider us to be elitists. Definitely not me. I see the United States for exactly what it is. It's good stuff, it's bad stuff, but I just tend to be that way with all things and all people, right? They got their pros, they got their cons, but on balance, I've traveled a good bit of the world. I kind of like it here. Now, am I satisfied? Well, it's hard to be satisfied when you see so many areas that can be improved. But you know what? That's true of every place, right? I talked to my sister who lives in England and has lived there for, I don't know, 30 years. They don't have air conditioning, right? So when it's hot there, they just sit around and sweat. I'm grateful we have air conditioning. But clearly, we've got issues with education, with homelessness, with a greater and greater gap between, the upper percentile and the lower percentile. So I'm certainly not oblivious to that, but I'm happy to be here. But I got to tell you, a couple of weeks ago, I was up in Canada on Lake Louise. I was happy to be there too. Canadians are just lovely people. That's a beautiful, beautiful country. I don't know that I'm man enough to go through the winters, um, but not all parts of Canada are cold in the winter. In stocks we trust. So look at the percentage of total household assets that are in equities, meaning stocks. It is the highest ever. 46% of people's net worth is in stocks. And then the other 54% gets divided among, checking accounts, savings accounts, real estate, personal property. So stock market is dominant in people's financial lives. So a higher stock market is good for most everybody. Tech is more popular than ever as an investment class. So inflows into tech funds are on pace for a record year. I mean, so far, we're at 216 billion, right? And credit AI with this and all things AI related. When the internet was first launched, then it attracted a ton of capital. When computers first became popular, they attracted a ton of capital. So, maybe the next thing will be, and it falls under tech, robotics, which I think is a high possibility. So, what goes up goes higher. So, there's this belief, and I deal with this all the time when I talk to people. If they hear about a stock or the market hitting an all-time high, they say to me, what goes up must come down. No, it's not true. Market's gone up for 120 years, not every year, but 70% of them. So when the market hits an all-time high, like we did last week, what normally happens next? Market goes higher. So if we can just avoid any black swan events like an escalation in the Middle East, I'm telling you, the road has been paved for this market to continue to move higher with earnings going up the way that they have been. Atlanta Fed sees major GDP growth. So normally this number will start off high and then it comes down. But their estimate for third quarter GDP growth, 6.2%. It's not going to come in that high, but anything north of 2 is great. I think most economists would tell you that 2 is about the sweet spot. Um, but for those of you wondering, how's the economy doing? Economy's doing pretty well. Now, some would argue, well, it's doing well for people that have money. Yeah, but hasn't it always been that way? I understand if you don't have any money, you don't really care how the economy is going, although you should, because if you don't have any money, but the economy is doing well, what does that tell you? There is opportunity out there, right? But you know what? I've been on this planet 70 years, and for 70 years, there's been opportunity. You just got to go create it. That's all. The most ordinary people are ending up with some of the most extraordinary results. I've got a new neighbor, and apparently this guy's done very well in his financial life. I would estimate he's probably in his 40s, and he just bought a 6,000 square foot home, had a boat parked out front, looked like about $150,000 boat. And, just another conversation. He's doing great. So is he a doctor? No. Is he a lawyer? No. Is he head of some cybersecurity team? Uh-uh. You know what he does for work? He's a stonemason. He has a hard time using his cell phone because of the calluses on his fingers. Do you need a college degree to do what he does? No. You just need to get good at some skill, work at it hard, not spend everything that you make, reinvest back into your business. And at some point, you get a chance to live a pretty damn nice life. Nothing has changed about that, except for people who believe something has changed or think it's impossible to get ahead. People that think like that, they never get ahead. Hourly earnings, that's slowing down. So, coming out of COVID, we had this huge demand for employees. And a lot of people left the workforce, and hourly earnings were going up, up, up. And that has started to get curbed. It's not awful, but the average hourly earnings are going up 3.15%. That's about the level of inflation. And on your increase in earnings, you pay tax. So maybe 3.15% is really 2.5%. You might be falling behind. So what do you have to do? Develop another skill set, learn another way to create income or to build wealth, which is hopefully why all of you are here. Market sentiment. So, as I told you last week, I expected that this number was going to move higher, and it certainly did. So, we took a jump on July 29th. 31% of independent investors who responded felt like the market would go higher over the next 6 months. 42% said lower. That's a huge differential. That's 11 points. On August the 5th, 37% said higher, 38% said lower. So almost a push. Now, that's still not as good as historical averages, where 37.5% say higher and 31.5% say lower. So there's a little bit of cautiousness in there. But I will tell you on the fear greed index, we have moved back into greed. What is Gordon Gekko? Greed is good, which, by the way, without greed, there's very little progress that happens. But a month ago, we were in neutral. A week ago, we were in neutral. Wasn't that long ago, we were in fear. Now we're in greed. So, what does greed tend to cause people to want to do? To buy. Fear of missing out. Fear, on the other hand, causes folks to tend to want to sell. So I am comfortable with neutral or greed. I would personally, if they asked me, where would I be? I'd be in neutral, pending what happens in the Middle East. That's just me. Future of interest rates. So this has changed a little bit. Last week, when I was with you, there was a 60-some% chance that we would see a rate increase in September. Well, now that probability is down to 50-50. And I personally think that if we're at 50-50, the Fed chair is going to be hard pressed to raise rates when he was appointed by Trump. And if he were appointed by Trump, I know Trump wants lower rates. I think if the Fed raised rates, that could create some political fallout for them. Now, they would tell you they don't pay attention to that. I don't believe it. I think they do pay attention to it. So if this holds, I don't think we're going to see a rate increase. Now, a lot can happen between now and the announcement in September. We're going to be getting 2 rounds of inflation data and what's happening with oil prices. Those will have a major influence. So we're expecting our first rate increase in October. But the probability, I mean, it's not like a slam dunk. It's 63%. And then we're expecting the second one in March. But that's not a slam dunk either. So it looked almost perfunctory that we would get a rate increase around the corner and another one before the end of the year. And now it's getting pushed back a little bit. Sector performance, year to date, market's up 13.35%. Pretty good for a little more than half the year. Big winner, of course, is energy. I consider that an outlier as it's driven by something I hope is unsustainable, being the war. So top of list for me is technology up 23%. That's all earnings. Then industrials, 19%. That's AI data centers. Materials, 15%. AI data centers. So those are the sectors that have beaten market averages. And kind of down at the bottom, you have utilities, which are considered very conservative. but people have been aggressive this year. So you don't have money flowing into utilities. Now, the good news is all 11 sectors, albeit some of them rather minutely, are up on the year. This week's earnings, I don't know what's going to move the market out of this group. Um, nothing on nothing today. Um, I mean, some of these are interesting to me because they're either AI or quantum related, like CoreWeave and Lumentum. But are they going to have a big effect on the overall market? On Wednesday, Nibius will be announcing. I think the biggest one on Wednesday will be Cisco. See how they're doing. Um, and I don't really see anything else going to move the market this week. So, all right, news of the week. Let's see what's it's a pretty heavy news week. So you're going to want to keep an eye on some of these announcements. So tomorrow, we have the small business optimism index. Now, is that market moving? No. But I'm always interested in, small business hires the vast majority of the employees in this country. So I'm always interested in sort of what their outlook is. I think it's worth paying attention to. Wednesday is when you start turning up the burner. We get our CPI number coming out. So last month it was down 0.4% in a huge surprise. This month it's only expected to go up 0.1%. That would be fantastic. That's annualized 1.2%. Year over year is supposed to move down from 3.5 to 3.4. That'd be great. Core, so that's minus food and energy. Last month there was no change. They're expecting that to go up 0.3% month over month. Core CPI year over year is expected to drop from 2.6 to 2.5. So that would be great. On Thursday, we get initial jobless claims, as we do every Thursday. Then we get inflation at the wholesale level, producer price index, and that's supposed to be month over month at 0.2%, and the core at 0.3%. Wouldn't be great. Well, it'd just be kind of where we're at now. And then on Friday, to me, one of the big tells on the economy, US retail sales. They've only got that growing 0.1%. So, and then we get preliminary consumer sentiment number coming out at 54.5. That would be up from the previous month. So there's a whole lot to watch. Check out maybe your favorite financial broadcast. Keep an eye on CNBC.com, but you're going to want to follow those developments. All right, let's take a look at the charts. As I am famous for saying, when in doubt, check the charts. Let's take a look at the S&P 500. Oh, SpaceX 132. Well, looks like I got to plug it in. SPX is the S&P 500. And we'll look at the chart. So this is a 6-month chart. 6 months ago, the S&P 500 was at 69.41. Now it's at 77.53. And this yellow line, for those of you that can see my screen, that's a 50-day moving average. So a couple things that I do with that. First thing is, what is the slope on the 50-day? It is tilted upward slightly. So that'd be mildly bullish. And are we above or below that level? We are above, which is also bullish. It looks like we may be forming a little level of resistance right here. So the question is, can we get above 7,800? And if we do, we could be ready to make that next move up. So all in all, the chart looks great. How about the VIX? So this is the volatility index on the S&P 500, also commonly referred to as the fear index. So the VIX kind of runs in a range between 15 and 25. We're all the way down at 1526. So what does that tell us? People aren't paying to insure to hedge their downside. Why would they not be doing that? Because they're pretty confident in the markets. So right now, basically, there's a sense of calm out there. Um, all right, let's talk about what you had asked, which was, explain to me a little bit about spread trades. So spread trades are different. Now we're talking options here. They're different than most any other type of an option trade. If we buy a call option, it's because we think the stock's going to go up. If we buy a put option, we think the stock's going to go down. And you need the stock to move in that direction in order to make money. With a spread trade, first of all, a spread trade indicates that there's both an option that we're buying and an option that we're selling simultaneously on the same underlying stock. And the premise is that the option that we're selling helps to pay for the option that we're buying. You follow? So it reduces our cost to get into a trade. The other thing that's really interesting about this is that when you put on a spread trade, you're basically betting that either you've identified a level below which the stock won't go, or above which the stock won't go, right? So you could have a stock, say, trading at 100. And by the way, you wouldn't do both of these at the same time. You could have a stock trading at 100. And maybe as you look at a chart, you've determined that you don't think the stock is going to fall below, say, 95, right? So you could build a trade around that. So you would be using call options. Even if the stock fell $5 a share, you could still make a maximum profit. See, if you just bought a straight call and the stock fell $5 a share and was there at expiration, you'd have lost everything you paid for the call. But with a spread trade, you can still be profitable, even though your anticipated direction was wrong. If you're using calls, it's because you think the stock price is going to move higher. In this case, if it went from, 100 to 95, I got it wrong. So let me kind of lay this out for you. And we teach 2-day classes on options training. If you're so interested, shoot me an email. And it would be, there's my email, Steve Sitkowski at gmail.com. For those of you in audio only, that's STEVESITKOWSKI at gmail.com. So here's a trade that we just recently closed on Citi. So in this case, we made a bet that the price of Citibank would not fall below $129 a share between the time we put the trade on and expiration. Now, what happened is we put this trade on and then the stock instantly moved up. So we were able to close this trade out literally in one day. And we made a profit of 10.2%. How cool is that? So, all right, that's it for this week. Hope you enjoyed that, found it beneficial. I always enjoy coming and having a chat with you. Thanks for hanging out. Let people know if you like it. And I'll be back with you again next week. So until then, be safe, be blessed. Bye for now.